We're going to kick things off with the VCs so we can get them out of the way. Sorry. Founder joke. I am going to use my handy dandy cheat sheet because I've not been able to memorize everybody. But if we can have the folks in the VC panel start making your way up, I'll do quick introductions. That way we don't have to spend time. I'll do a quick intro as folks come up. Oh, Sam, if you want to pop up. Yep, grab a spot. Oh, Sam is from A16Z, or A16Z, as we call it in my home country of France. Adam's from QED Investors. John from Flourish, that does a lot of work in emerging markets. And then it'll be moderated by CJ from Amity. I'm going to rib on CJ for a second. I don't know if the reason CJ is moderating and not on the panel is I think CJ is the smartest VC in the world. No offense to you guys. So it'd be very unfair to put him on the panel.
No bias either, right?
No bias at all. And I'll tell you why I think CJ is the smartest VC in the world, and then you can tell me if I'm biased. It's because he led our round. So on that note.
Do we have a fourth too, or no?
No, I think you guys will just have to pass around if that works.
Cool.
Thanks.
Yeah. All right, well, maybe going to start with just some intros, and then we'll dive into the meaty questions. I think the meaty one off the bat is why stablecoins are the dumbest use case of crypto from Sam. But let's do some intros first.
Yeah. Thank you, everybody, and pumped to be here. I'm John Onwalo from Flourish Ventures. We're an $850 million global fintech-focused fund. We've been on the ground in many emerging markets for the last couple decades. Our mission is to systematically change the way that financial services operates. And we do that by investing in a number of great founders across the ecosystem. And we think that payment infrastructure and stablecoin more broadly is going to be a stepwise change for improving efficiency across the ecosystem.
Hey, everybody. Thank you for having us here today. My name's Adams. I'm with QED Investors. We are a global fintech-focused fund, investing everything from pre-PowerPoint to pre-IPO, and investing in pretty much every corner of the world. Very excited about what stablecoins could mean for consumers, for businesses. We believe they could have a transformative impact to the global economy and to how people interact with money.
Hey everyone, I'm Sam. I'm an investor at A16Z. I was an engineer for 5 years doing distributed systems research, and then I went to MIT, and while there I worked at the Fed on some stablecoin stuff. And I realized just how horrible payments are today, pre-stablecoin. And it kind of got me excited. I ended up joining A16Z as an investor. I've been doing a lot of stablecoin stuff on our crypto team for the last 2 years. I also do some infrastructure investing. But over the last year, stablecoins have taken off, and we've been able to spend a lot more time with it.
Cool. Well, maybe Sam, starting with you then. Why are stablecoins the dumbest use case in crypto?
Okay, right.
And part of this, maybe you break it apart. Are stablecoins so great, or is it just America that's so great? Is it the US dollar, as you think about your Fed experience?
Yeah, that's a great question. So I asked to go on a podcast, and the first thing I say is stablecoins, this thing I focus all my time on, are the dumbest use of crypto. Obviously, I don't believe that's true. I mean, like the specific point I'm trying to get at is that obviously stablecoins and payments were going to be the first thing that crypto was used for. We've been talking about it since 2013, that we should be using crypto, this sort of permissionless, globally available ledger, as a means of transaction, a unit of account, and all of these topics. So about 18 months ago, we realized that it was going to cost less than 1 cent and take less than 1 second to send $1 or any amount of money from anywhere in the world on blockchain rails. And when that happened, we realized that it's not just the form factor of the dollar, the UX there is a lot of global demand for dollars, but it's not just that global demand. It's the fact that now we can do atomic payments in a way that was never possible before on traditional payment rails. So, it's both. I mean, it's not the dumbest use, it's the first use, and excited to see it continue to grow.
Cool. Anything to add?
I'd add right now, most use cases we're seeing are because people want the US dollar. And one reason we're so excited about stablecoins at QED is because we believe in the US dollar. And if people want more US dollars, that's good for the US economy. That's good for all of us in this room. And it's good for the global economy as well. Over time, we believe the power of blockchain technology will lead to better, faster, cheaper forms of money movement and money savings. But for now, a lot of the core focus is rooted in demand for the dollar.
And John, maybe you spent a lot of time internationally. What's some of the international perspective of the greatness of America and the dollar? And how do you see the emergence of stablecoins there? Same question.
Yeah, of course. I mean, in emerging markets, there's a tremendous amount of friction as it relates to payment infrastructure. Moreover, as you think about local currencies from a volatility perspective, from an inflation perspective, or even a capital controls perspective, stablecoins can really help different businesses looking to do international commerce transcend a lot of this. And I think we can speak a little bit later about, some of the Flourish portfolio companies that are really looking to build the core infrastructure that enables this.
It's a good segue. If you're thinking about the landscape of crypto, and I'm kind of just looking in the audience, I was talking to Kevin about who we've got in the seats today. We've got people that are building companies. We have entrepreneurs. We have people in the audience that are working at incumbents that are maybe crypto curious, trying to figure out how do they get into the stablecoin world. How should they parse the landscape? How should they think about the different players? VCs, we spend a lot of time thinking about the different players that are emerging. What's kind of your own either personal view or firm's view? How do you guys kind of cut up the landscape right now? And how do you guys think about it?
Yeah, from a stablecoin infrastructure perspective, we've looked at a lot of cross-border infrastructure plays because we see cross-border as one of the real core use cases of stablecoin today. You look at how fiat payments have worked across the SWIFT ecosystem. Historically, that's been heavily dominated by correspondent banking infrastructure. Roughly a decade or so ago, we saw new entrants into the ecosystem looking to build out new, more efficient payment infrastructure, call it the Tunes, Niems, Airwallexes, et cetera of the world. But in many cases, these businesses also relied on the existing SWIFT ecosystem. They were able to bring in new and more efficient tech, and they were able to also onshore and manage their treasury locally, where they were able to do disbursements and payouts in a much quicker fashion than traditional SWIFT payments, which we thought was a huge step up and improvement. And obviously, the Wises of the world have been tremendously successful. But then there's been this new era, right, of stablecoin native infrastructure players. Many of the businesses that you guys have probably heard of, Bridge maybe being the most popular one, providing middleware or middle mile infrastructure. I think folks have referred to it as a stablecoin sandwich. And what we've learned over the last year or so and kind of how our perspective has shifted is that, although there are a tremendous amount of valuable benefits from stablecoin infrastructure, such as speed efficiencies, cost efficiencies, and transparency efficiencies, the question around that we have is, where will the value accrete to, right? And I think that our thesis currently right now is that it won't necessarily just be the new stablecoin entrance into the ecosystem, but it'll be businesses that are able to leverage different stablecoin infrastructure across the stack, or we'll be in this hybrid world where next-gen payment infrastructure platforms will be able to leverage stablecoin infrastructure, and new entrants will have to leverage fiat infrastructure as well. And then around this ecosystem, there will be a huge requirement for a number of different infrastructure players across the issuing stack, like Circle and Paxos, across the compliance and compliance stack to validate transactions, and a number of other folks as well.
I thought it was a great background and overview. The only piece that I might add is, as we will talk about at QED, just because it's on blockchain does not mean the physics of finance no longer apply. And one of the core pieces we look towards when looking at the ecosystem broadly and when underwriting specifically is to look towards how does this company manage risk? And that is risk of balance sheet. How do you think about liquidity management? How do you think about duration risk management, and that all the way up to the application layer that John broke down of how do you think about KYC risk? How do you think about managing AML? All of those things still matter, and they arguably matter even more than they did in the world of fintech and TradFi, as one calls it at a crypto conference.
Yeah, so I think I love the background you guys. I was actually very curious what you guys would say. We look at it from a more crypto native perspective. And actually, just to get a feel for the audience, because I don't really know who is here, could you just raise your hand if you're Web3 native as a person? That's what you focus on? And what if you focus on traditional finance? Okay, so this is a little bit of both, but pretty mixed. When we look at the stablecoin ecosystem, we don't just look at the financial infrastructure that's around doing payments, doing compliance, adding features on top of stablecoin rails. We also look at the blockchain networks that enable those things. And so we've made a bunch of investments there that you guys can look into in your own time. But the point is, we had to make blockchains faster, better, more programmable in order to enable this new way of actually doing payments. And then, so I guess the question originally was around sort of the market structure, and that's why being in stablecoins has been so fascinating. Is that there's a lot of ways to break the market structure down. There's the infrastructure layer sitting below stablecoins. There's this sort of core issuance piece, which is like around actually bringing stablecoins on chain. Then there's sort of tools that allow you to interact with them, wallets, different sort of dApp technologies. And then of course, on top of them, there's going to be all sorts of new applications and experiences that weren't possible until you had such cheap, fast, simple, programmable payments. And then there's opportunities that bring us to table stakes payments today, things like subscriptions, refunds, fraud protection, and so forth. All of these have opportunities, probably at different price points, different valuations, but we're looking across the stack, and each sort of has its own part to play.
And so maybe just to double click on some of that, I like your little survey of the audience. And if I'm thinking about the traditional finance people, how do the business models change in a stablecoin powered world?
Yeah, they change depending on where you are in that market map. So look, if you're building the underlying infrastructure, sort of the compute, the L1s, then you've got a pretty crypto native business model probably. Mm-hmm. There's going to be businesses that are like remittances, where they're going to take a pretty traditional remittance business model. It'll be a cut of transaction fees. And my guess is that there's going to be, we go business by business, but that's not that interesting. One of the categories that's most exciting to me are the businesses that weren't possible until today. So are there like new sort of micro payment ideas for agents? Is there streaming payments that reduce sort of debt load on traditional businesses? Are there going to be loyalty applications that just like weren't worth building before because it costs too much to integrate payments into an application? We've got a portfolio company called Blackbird that's doing approximately that. And yeah, so it's going to be really dependent, but there's a pretty wide open world to play with.
One piece that I might add to that is, while Sam, you rightly point out that L1s must have a token, that's an important part of solving the cold start problem for those businesses. As you go further and further up the stack, the larger the gap becomes between your business and when it makes sense to have a token. In many scenarios, we can see tokens as the original sin of crypto. That once you have that, your goal becomes make token go up, not make your payments faster, stronger, more resilient, more trustworthy, or cheaper. Not to say anything bad about tokens, but I would word of caution to be careful and be very thoughtful and ask oneself, do I really, really need this for my business to exist? And if so, carry on. But it's not always that's not always the case.
Anything to add?
I think you guys summed it up well. I think, Sam, you mentioned something that's really interesting is I think most of the initial use cases of stables have been around payment infrastructure, but it's really the business models that are going to come out of that and what's enabled. I think you guys have a portfolio company in your platform at Andreessen, right, that enables copyright issues into the agentic commerce world, right? And the problem that business is solving is not a payments issue in particular, right? But it's a license of data. So foundational models today go out and scrape the web for information. And in many cases, they've trained those models on, maybe compliantly acquired data, maybe not, right? And could we see in the future a world where there'll be a law that's passed that requires foundational models or applications that sit on top of it to show proof of license and show proof of procurement of that information? And it's in those use cases, in the microtransactions, where stablecoins actually could make all the difference to making this work. So I appreciated that point.
I just want to add one thing to that. Because this is, I don't have as native of a fintech background as you guys do. And I came in was sort of surprised by how much paperwork is often involved in payments. And this is, I'm just going to sort of reiterate this point, but with a little bit more fidelity. There's a lot of payments that are where the cost is actually sort of a service provider cost, where you're sort of paying someone to handle escrow or deal with contracts. And it'll be interesting. There's a huge group of opportunities that are going to come when we can automate some of those those contractors, those people who are, doing that service job and make the payments just flow faster. There's going to be, exactly those new opportunities.
Awesome. Maybe let's flip it over to the other side on the entrepreneurs. What's the ecosystem like for people raising in the stablecoin world? How are you guys as VCs looking at stablecoin businesses, valuations right now? What's the landscape if you're an entrepreneur looking to meet with VCs and building your business in the stablecoin world?
I'll start, and I'd say kind of at a high level, there's a lot of excitement. You look around this room, and this is a full room of people looking to build and invest into this space. I think we all see that this could be, there could be many generational companies built within this ecosystem. So now is a fantastic time to be investing and building in the space. I think it depends a lot on kind of where you sit within the ecosystem and how to think about capitalizing your business, how to fundraise, and then kind of on the investing side, the corresponding valuation of the company. But I think it's very core. There's interest, appetite, particularly when we talk about the international opportunities, particularly when we look at how people are saving, how people are spending, and how people are moving money around the world. There's huge profit pools to be tapped into there, and we're in the very early innings on that.
Yeah, I mean, maybe to touch a little bit on differentiation, right? We ask ourselves, or at least a few years ago, we were saying, is it faster? Is it cheaper? Like, what's your take rate? And what we've realized over time is that there's very limited defensibility as it relates to, call it, the stablecoin sandwich. And a lot of businesses are building in a similar fashion. Where we've prioritized from a portfolio perspective is businesses that have local licenses in jurisdictions where they can on and off ramp, which we believe is more defensible, or local bank relationships here in the US, which is very difficult to get. I see Colton from Route Fusion here. I know he spent a number of different years trying to get those licenses, and that creates real moat, right? In addition to these local on and off ramps, what we're super excited about, given our thesis is a hybrid world where we have fiat players using stablecoin infrastructure and stablecoin native players using fiat infrastructure, is orchestration. And I think I'd be remiss to not give a shout out to Kevin and the Borderless team, who are thinking about ways to innovatively orchestrate what will be a complex ecosystem over time. In addition to that, fraud and compliance continues to stand out to create applications and services around the ecosystem that will mitigate fraudulent use of this infrastructure. And then on top of that, just thinking about innovative ways to launch new stablecoins faster, is another area that we're super excited about.
I'm glad earlier I sort of gave this my sense of the market map. I mean, there are these blockchain opportunities that are sort of layer one, layer two. There's infrastructure, crypto native infrastructure that's going to be built. And then there's stablecoin issuers. And then we've got the apps built on top of stablecoins. I think, we sort of believe valuations for the blockchain networks should be typical blockchain network valuations. And then remittance companies on top should have remittance company valuations. And so given the overall excitement about stablecoins, we've probably seen some of the app layer get a little bit more inflated than where it really sits in the stack. But there's huge opportunities. And I keep going back to this, but the biggest opportunities are probably yet to come. Like, we're not just going to be retrofitting payments. We're going to be building new sort of experiences. They might not even really look like what we think of as being a payment company. And those bets probably will be big as they come up.
Yeah, I think that's one of the most interesting things we're seeing is that a remittance business might not be making money on remittances anymore. They're making it on float. They're making it on totally other elements of the business than before. But Let's shift over to just government and some of the more topical things that are going on with regulation. We've seen the Stable Act recently proposed and discussed. A lot of discussion about tariffs right now. How are things in Washington kind of impacting both builders and potential customers? How do you guys feel about all the moving parts on the regulatory and government side?
Like I can lead off. I mean, look, I work for A16Z Crypto. We've got a huge policy team, and so I'm sort of lucky to get to not get into the weeds of each piece of legislation. But the biggest thing for me is that it seems pretty likely that we're going to have clear rules of the road for entrepreneurs who want to build with stablecoins, and that's the most exciting thing. I mean, tariffs again. I don't know. I think it's going to be maybe a little bit randomizing. It's hard to tell what the effects of that will be. But we're just looking forward to a world where people can, get ready to build without worrying about the ramifications of working in crypto.
It's a great question, right? And there's obviously evolving policy around this ecosystem. Prior to joining Flourish, I actually worked in DC for a government-backed agency that was backed by the Treasury. And at the time, this was roughly 5 years ago, there was a significant amount of hesitation around stablecoin infrastructure or crypto in general, with the thought that it might disintermediate the central bank, weaken the dollar. But if you look at, today, roughly 50% or half of SWIFT payments are US dollar denominated. And to Adam's point, US dollar is a huge priority for the US in keeping it strong and relevant from a foreign policy perspective. The float on stablecoin issuance today, or that's actively traded, is 95% of stablecoins are denominated in USD. So from a shift in policy in Washington perspective, the US is actually tremendously incentivized to provide really open regulatory policy to catalyze this even further. And to Adam's point, I think that will be tremendously impactful for the amount of innovation that can be created in this ecosystem.
Well said.
Cool. So I want to give something, maybe a commentary here from some of the cynics. And whether you're a cynic yourself in the audience, probably not if you're here, but you probably have to interact with some cynics. You probably have to go either report to other people on your team. You have to people that's saying, hey, what is, what's actually going on with stablecoins? Why does it matter? And so actually a friend sent a tweet the other day. I'll read his tweet. Sam responded to it. But I'll let everyone else in the panel respond too. But his tweet was, WTF is my cousin in rural India going to do with USDC? With Wise, he can buy groceries a few seconds after I hit send. Stables are useless without on and off ramps, and that's why this adoption map looks like it does, a complete mess. And that was Sheil Minot, for those that know Sheil. But why do stablecoins actually matter? Can't we just use existing tools?
I mean, I'm happy to kick it off and then pass it over to Sam. My dad, I'm half Nigerian. My dad lives in Lagos, Nigeria, and he's an entrepreneur. And I grew up watching him build his business between the US and Nigeria and transfer payments. What I can say over the last 30 plus years of watching him and his business evolve is that there's still a tremendous amount of friction within the ecosystem, but there's been a dramatic stepwise change as it relates to how he can more efficiently run his business from a working capital perspective. And even minimizing the short time and mitigating the SWIFT infrastructure from a days perspective increases the working capital dynamics of his business there. In addition to that, even from a remittance standpoint, there's a huge amount of opportunity for peer-to-peer payments in this ecosystem. And that's part of the reason, to your point that Sheil mentioned on, they're nothing without on and off ramps. That's part of the game as well. And that's part of why we have prioritized building or investing in businesses locally from an on and off ramp perspective that's actually licensed. So Zone, one of our businesses based in Nigeria, it services the top four of the 5 banks in Nigeria. They have a central bank license in Nigeria. Fuse is another one that does payouts across the Middle East. They're one of the only ones with licensed infrastructure in that ecosystem. And we think that businesses like this are going to be tremendously impactful to solve a lot of the issues that I think Sheil was bringing up.
I was excited that to hear you bring this up because Sheil tweeted this. I got ready to spit something spicy back, and ultimately the reason why we're so excited about stablecoins is because anyone can permissionlessly build the on and off ramp infrastructure. So these remittance companies that have existed so far they've got a vertically integrated inventory management problem where they've got to keep track of dollars and pesos and dong in each of these countries. And there's no way that you as an entrepreneur, you as a user can go interact with the subsystems within it. And so when you look at these remittance companies today, I mean, even I love Stripe. Stripe is, I think they really only support 42 countries. They're a global payments product, and they're doing some of the best work around. But that's, for those keeping track at home, you're missing 150 countries that you might want to integrate into. And so, okay, so that's the first part, is like by having this be a global permissionless network, you can really build that infrastructure, and you can have local entrepreneurs in countries that are underserved build those integrations that allow people in those countries to have access to better products, maybe access to the dollar, access to new infrastructure. It'll allow fintechs to go global on day one, potentially, if they really want to reach users in those countries. But then what's also funny about this tweet is this happened 3 weeks ago. And then in the last 3 weeks, Visa and Mastercard both announced that if you hold stablecoins in your wallet, they'll issue a credit card now in this huge list of countries. So just like the announcements in the last 3 weeks have already taken stablecoin payments at local point of sale terminals much more global than they were before, in part because of the fact that you can permissionlessly build on them. And I'm so excited to see more of those announcements coming up. I think, it's going to be an exciting 2 years.
Awesome. So I'm going to do.
Can I add one piece?
Yeah, please do.
Specifically kind of on that tweet, the cheapest, fastest way to move money is to not move money at all. And much of today's remittance and fintech ecosystem is built on matching and netting on one's own balance sheet. One of the reasons stablecoins is so exciting is the opening up of those networks and the ability to rebuild and re-architect the global correspondent banking network. That will happen over a very long period of time and will take a lot of different building blocks, some of which we have today, some of which we don't yet have. Two areas in particular that we're really excited about and keeping a close eye on are those bringing liquidity into the ecosystem, absolutely critical for the problem that Sheil mentioned to go away. And then the other is those that are able to manage risk better. I mentioned risk earlier, and I have to keep saying it. That's the name of the game.
Yeah, I think that's a really interesting point. I might, breach the moderating wall for just a second and share an anecdote. Kevin at Borderless and I were on the phone with a deca-billion-dollar book value bank a couple of weeks ago. And we're thinking it's all about the stablecoin sandwich, about moving funds, about all these things. And they brought some insights to us about reasons they're evaluating stablecoins are their ability to monetize the FX spread when they actually send money, and as well as reduce the customer service cost. One of the biggest customer service requests or questions they get is, where's my wire when I send it internationally? And through stablecoins, they're able to offer almost instant settlements. SWIFT only operates during bank hours. If you look at SEPA in the EU, it operates 24/7, 365. And so there's just totally different value propositions that start to unlock and total meaningful changes to the correspondent banking network that I think emerge from there. So I'm just being conscious of time, and I know we want to do a few minutes of audience questions, but just maybe a closing question for each of you. 1 line, 2 lines. If we're just going to kind of bull post about, what gets you. I asked about the cynics. What can go right in this industry? What gets you most excited? Where are we in 5 years? Give us your biggest sense of optimism towards kind of devoting your careers and your time here.
5 years from now, we will see a meaningful amount of P2P international money movement running through stablecoins. We will also see regulation start to come around. Sam rightly touched on the importance of clarity, and that will allow a tremendous amount of innovation that has held us back up till now.
What excites us the most, right, is everything outside of payments as well. All the new innovations that are going to be created from stablecoin infrastructure, how that might be governed, what the regulatory frameworks are around that. We have a lot of clarity as it relates to clear rules and guidelines that are set up, and we think that that'll create a significant amount of innovation and bring efficiency to the system.
I think the most exciting thing that could happen in 5 years is that people still really don't know what stablecoins are. They just think, wow, there are all of these new capabilities for my money. all the apps they use work better. People are really on stablecoin rails, and they just think of stablecoins as part of money, but making their money move faster, potentially earn more places to spend it, and then also new verbs, spend, send, earn, and 150 more that we haven't experienced yet because it was too challenging to build.
Cool. All right. Well, thank you, guys. Over to the audience who's got some questions for our venture capitalists. Go ahead.
Oh, I was just wondering, what are your key KPIs, the three main things you look at when you evaluate stablecoin startups?
Just for X, the question is, what are your 3 KPIs that you look at when you're looking at startups?
I'll start. It depends on kind of where you fall in the stack. Yeah. But the question you're going to hear me ask right out of the gate is, who's your head of compliance? Who's your head of risk? And what do those systems, what do those processes look like? How do you think about scaling out that function? How do you think about balancing growth with risk and compliance?
I think along that same line is, what licenses do you have? What bank relationships do you have? And then on top of that is, we look across the customer profiles of your businesses, right? How sticky are these customers? What's the customer quality, and how long will you be able to serve them?
Yeah, all depends on where you are in the stack.
Cool.
I feel like banks are still key to this infrastructure that's being built around stablecoins. And what do you see being built in the top, and what should the banks be thinking about in terms of how they can enable and benefit from the pool of stablecoins built transactionally and non-custodially?
What should banks be thinking about the stablecoin boom?
There's actually probably a lot of room right now for a forward-thinking bank to make a strong move into the stablecoin space and really grow their deposit base. Expand what they're earning net interest margin on, grow revenues, and be a part of the next generation of payment infrastructure. Now, are they going to do that? Banks aren't super known for taking risks like that. And then just how will stablecoins integrate with banking infrastructure? Well, I think we're going to see a period of growth in stablecoins where being able to on and off ramp from banks will matter a ton. That'll really change how people think about stablecoins. But then eventually that infrastructure is going to get good enough that we're probably going to think about it a little bit less. Maybe we see an overall reduction in deposit balances, a little bit of erosion there. But it's going to be pretty path dependent in terms of where people actually end up keeping their money long term.
Go ahead.
The only other piece I'd add is banks are an integral part of where money is stored, and they'll continue to play that role. The shift in how money is stored presents both an opportunity and a risk for banks. There's a very real scenario here where we could see a spike in demand for the US dollar thanks to increased availability, but we could also see a shift away from M1 money supply and depository accounts and in DDAs and into high yield treasury or money market funds, and shifting into different types of storage. I don't know. Maybe that's good and maybe that's bad. Depends on how you position yourself as a bank.
Cool. Maybe last one, Pink Hat.
Hey, I work for an on-chain market maker product. One thing that's really top of mind for us right now is the future of on-chain forex markets. So between dollar-based stablecoins or peso-based stablecoin. And I'm curious if any of you want to opine on where you see that market going in the future, i.e. what AMMs, what applications will be used to orchestrate liquidity, and who you think the actual LPs could end up using. Is it going to be market makers or retail type LPs? Yeah.
All right, the question comes from an on-chain market maker, and the question is, what's the future of FX?
So future of FX is a pretty big topic. I think there's some key capabilities that don't exist right now to do FX on chain. Mostly FX traders aren't holding large cash balances in non-yield bearing assets. They would keep it in treasuries, and they do something that looks like an RFQ. And so we probably need to have features in AMMs that support those kinds of that kind of usage, so that market makers in the FX market can tighten spreads, and you can move from on-chain dollars into on-chain pesos at a better exchange rate. But that's that's going to be one of the key pieces of infrastructure that allows us to make stablecoins more global. And I'm glad that you're working on it.
Cool. We'll give it up for our panel, everybody.